along the way, you get a little markup, just like in the retail industry, right? You produce a banana, you pick a banana, and then the farmer tacks a little extra on, and then they send it to a distributor. The distributor tacks a little extra on, and then they send it to the shop or the supermarket, and they tack a little bit extra on. And so by the time you get the banana, you're paying all those middle people. Same thing happens in the currency market, right? Except for apiary. What Apiary Fund does is we deal directly with the institutions. So we go directly to the banks. So we don't have any middlemen. So the reason we can do that is because when I will actually sit down with a bank and I'll say, hey, look, bank, I'm going to push, $1 billion through your firm, through your bank. All my traders, they trade a lot. They are very active. They move a lot of money in and out of the market. So I can promise you that I'll move $1 billion through your bank. And the bank's like, I'm listening. and so then from that point, then we work out all of the costs and everything like that are involved in the transaction. So Apiary Fund, as an institution, we get to bypass a lot of those middlemen. What that does for us is it makes it so that, number one, we get trades from your kitchen, Kathy. We get trades from your kitchen to the banks lightning fast, because we're not going through middle people. And number two is super cheap. Does that make sense? Super cheap.
You mentioned it's like nanoseconds.
Yeah, nanoseconds. Can you imagine, like, you're going your trades, well, through the thing like this, we kind of send the trades all over, but basically your trades are going from your kitchen to New Zealand. We have a bank in New Zealand we deal with, maybe Singapore. So your trades might end up in Singapore or London. So all over the place. All that's done in the background. Does that make sense?
Yeah.
So we had to build our own platform to facilitate that, because we have over 2,000 traders that are managing money, and they're all over the world, right? And so Apiary Fund has to keep an eye on all those different accounts, and we have to make sure that none of those accounts are getting into too much hot water. So sometimes it's easy to get take a little bit extra risk than you're not thinking you're taking. And so our system monitors and manages all of that to make sure that not one of our 2,000 plus traders are getting us into too much trouble. So we have our system monitors and things. So this is why, Kathy, that I feel comfortable taking someone like yourself and showing you all the work ropes, right? Taking you from your very first trade all the way up to the point where now you're trading Apiary's money. And I can feel comfortable doing that because the model that I built manages that entire process. So even if you lose a little bit of money in the process, which you will, that's how it's part of it, it's okay, because the system is there to kind of monitor and track and make sure that nothing gets too far out of hand. So if you think about it, you kind of have a lane that, that you can live as much as you want to, buy and sell and do anything you want to inside a lane. And as long as you don't get outside of that lane, everything is hunky-dory, everything's great. But however, when you start to get out of that lane, then our system steps in and kind of takes over at that point. So
yeah, I was really impressed with that when you shared that in Vegas about how there was a crash, but because your system has that stop date kind of thing. Like, wow, that's awesome.
Yeah, it's an important feature, and Kathy, if you went and did this on your own, if you went into a broker, you wouldn't have that lane.
Yeah.
And that's why most people get in trouble in the market, is because they don't have a good lane to live in, and so they take all kinds of risk. All right, so here's the platform, and I was explaining to Kathy, we've got the 5-minute chart in the upper right-hand corner, a 1-minute chart, and we're looking at the Euro USD right now. So these candles, you can kind of tell this market is kind of going up right now, right? Each one of these little bars is 1 minute, and right now that market is trading right here. That box is floating up and down. That's the last price in the market. So whatever the last price was, it kind of reflects right here. So we can see that it went from here to here, from here up to here, from here up to where it is right now. So the market is going up. So what that means is the euro is getting stronger. Does that make sense?
Yes.
So if we get these blue candles, that means the euro is getting weaker. And so we're going to constantly be buying and selling the euro based on whether we think that the euro is going to get stronger or weaker. Now, another problem that a lot of traders, when they first trade, is they think that they have to make a lot of money in one trade. They think that I have to do all this analysis work, and I have to make all my money in one trade, and I can't be wrong because I've got one trade to make all my money in. What you're going to see today, Kathy, is we're going to divide those trades up into a ton of little small trades. And like this is the order history, and we placed that one trade this morning, Kathy, where we made $2, about 2 pips, which actually got to be $1.60. We're going to do something very different than what most people do, and we're going to place a lot of trades and make a little bit of money on each one of them. What that does for us is it doesn't put all of our eggs in one basket. So we can trade a lot and make a lot of money, but we're going to do it little itty bitty pieces at a time. And so we're not taking a lot of risk on one trade. Everything we do in trading is designed to reduce risk. I know that sounds counter what you might think, because we think that the best traders take a lot of risk and make a lot of money, right? Well, in reality, what happens is the best traders take very little risk and make lots of little incomes. And so I'm going to show you how to do that. So getting back to the layout here, we got the 5-minute chart on the right, 1-minute chart on the left, and then our buy and sell buttons are down here. So the buy is on the right, sell is on the left. And so I'm going to have you pushing those buttons, Kathy, here in just a moment. And then once we enter into a trade, those trades will show up over here. Anything that shows up right here is an active trade. And then we'll close it out by hitting the X on the trade, or we have an automatic target of 2 pips on every trade over here. So it'll either hit 2 pips, or we'll hit the X over here and close it out manually. It'll hit 2 pips automatically, or we manually close it out by hitting the X over here. So with that, let's go ahead and get into our first trades. What do you say?
I'm ready.
You ready?
I am.
Okay. All right. So right now, for the majority of the morning, the market has kind of sold off. And so right now the market is going up on the short term, but for most of the morning it's been selling off. So what we're going to do is we're going to start to sell a little bit here because we think that as it hits a high point, the market's going to start to go down. So what Kathy, your first trade over here, go ahead and click that sell button.
So right where you're at.
Yep. Go ahead and click that sell button. There you go. There's your first trade. Everybody, let's give Kathy a round of applause. This is her first trade. Now.
Thanks, Robert.
That was it. Okay. So now we're going to watch and see. Right now we're a little upside down. It's red, right? Now it's at break even. I'm looking down here, right here. And now it's green. So now we're making a little bit of money.
Okay, where is the red and green? I might have
to right here, right where let me run the mouse for a second. It's 0, now it's green. That means we're making money. 80 cents. $1.
Okay, got it.
Yeah. And so as it drops, it should hit the $2 mark and close us out. So here's $1. There you go. Your first trade was a winner chicken dinner.
Okay, let's go look at that. I'm sold. I'm so glad I got the system. I can't wait to do that. All right.
So if you look over here, there's your sell. You see that? That was your first. That was your trade. And here's how much. $1.60, or we made $1.20 on that trade. So not too bad for your first trade, Kathy. That's awesome. Okay, now you got it down.
Well, now it's like, okay, how do I, the thing is, when do I know to do one or the other? And that's
I'll explain. Okay, so what we're going to do is we're going to look for patterns on the 5-minute chart. So we're going to come over here to the 5-minute chart, and we're going to look for patterns. And because if we can catch a pattern on the 5-minute chart, that means that there's a high probability of it moving on the 1-minute chart. Does that make sense? So it's got to, if we get a high probability over here, then that means that we're almost definitely going to get the movement over here. And so we're going to time ourselves to get in with the high probability moves on the small time frame by looking for patterns on that higher time frame. So that's kind of the approach we're going to do. So what I'll do is I'll come in here, and there's a couple of things. Right now, I'm going to watch this. If it gets up to this line, Kathy, right there. If it gets up to that line, I want you to click the sell button 5 times. Like right now, go ahead and click it once, twice, 3, 4, 5. Perfect. Excellent. One more time. Okay. So what we're going to do is we're going to put a bunch of little trades on like that at different layers. So the next thing is if it comes up and hits that line up there, I want you to put another layer on, another 5 trades. So
selling.
Selling.
Okay, so it's below now that first line that we were looking at.
Yep. So wait for it to go up. Now, if it comes down and hits all these green lines, those are our target lines, and it'll close out the trade automatically. So just closed out of another. You just made another full 3. Looks like 3 profitable trades there. There's a question from Colin whether the platform allows hedging. Yes, it does. We're an institution, so we can hedge between different banks, Colin, basically. So we don't necessarily have to live by the same rules as the retail industry. We can send longs to one bank and shorts to the other, and and be able to hedge. Colin's got some familiarity with the market, so
that's awesome. I know I have a friend.
Yeah, you're good. You're second. Let's take a look at that, Kathy. Check it out. You are 6 for 6. That was the first trade you placed. Then the 5, 1, 2, 3, 4, 5, and all of them winners. Boom, 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 down there. Isn't that cool?
That just blows my mind. I'm still watching it. It's dropping. So we're waiting for it to get to the top red.
Yeah, so looking over here on that 5-minute chart, we're going to look for that to kind of hit that red line right there and kind of bounce off of it. See what it's doing right now? It's bouncing up. See, it kind of came down and hit that red line and bounced up.
Okay.
So we're going to look for that to continue to happen, or it's going to break. And now if it breaks, like it's breaking right now, it's crossing down through.
Right.
We're going to look for a reversal on the 1-minute chart. So we're going to look for it to come down either right here and turn and move higher. If not there, about right there and turn and move higher. And if not there, then about here. So what we're looking at is where does it now, if it starts to move lower, which it's starting to do right now, our job is to find where the market is going to make its next turn and move higher. So what we're going to do is we're going to place our first trade, our longs. Now these are going to be buys. When I say long, that means buy. When I say short, that means sell. So we're going to buy when it gets to the first line or the second line or the third line. But those are the areas where we're going to look for it to kind of make a turn and move back up. Okay?
So you're saying those are the ones to do the long?
Yeah, so the longs, the buys, we'll click that button down there in the bottom right-hand corner.
Okay.
So now we kind of wait. So as it comes into that red line, get ready. Get your mouse on that buy button over there.
And I'm not going to do just once or do that?
Yeah, go ahead and do like 2 for the first one.
Okay. When it
right
hits.
now. Yep, right now. 2, 1, 2.
I got the 2, I think, right? Or did it not?
Do it again. Yeah, do it again. I didn't get that second one. Now, if it gets down to that next line, do it again. 2 more.
Okay.
Give it a second. Now, go ahead and do 2 more. And do 2 more. So build up, keep going, 2 more trade, another trade, and another trade, and another one. Stop. So as it comes down, we're going to buy, and then as it comes up, we're going to stop buying. So that's why we stopped, is because it came right down and then rallied up.
Okay.
And so you just made money on 3. You just made more money. So now all you have is 4 left.
So how am I making money when it's going up?
Because you bought down here and now you're selling up here. So you bought at the low point and now you're selling at a high point. And now one thing I'm going to do here is I'm going to adjust these targets down. So these are our target lines. So the minute that market crosses one of these lines, it'll close it out. So we're gonna bring the targets down just a little bit here, so they're a little easier for the market to hit them. So watch as that market goes up, it'll close those trades out. There you go, done. Do you see when it crossed those lines?
Yeah.
It closed them all out. So those trades are done. And now let's look back in history. Man, you are killing it this morning, Kathy. You're doing so well.
I know Steve talked about how upsetting he is on Saturday and Sunday because he can't trade. Like, it could be a pass.
So check this out. This was your first trade of the day. And all of these are all trades that you placed from here, from that line up, are all trades that you've placed this morning. Every one of them winners. So you made about $1.20, $1.20, $1.90, $1.70, $1.50, $1.60, $1.60, $1.80, $1.80, $1.70, $1.70, $1.30, $1.60, $1.10, $1.90, $1.60, $1.20. Just like that.
It's like the compound effect, where pennies are worth so much.
Yeah, pennies are all worth a lot.
Yeah.
So, yeah, you're doing really good, really great this morning. Okay, so what happened is we notice what we did there, Kathy, is we predetermined where we were going to buy, right? We said if it's either going to turn here or it's going to turn here. And so we placed a couple of trades there, and then we placed a couple of trades there, and it ended up turning on that second line. So now we've got to kind of do the same thing. We've got to find out where the next good place to buy or sell is. So if it comes down to that line again, go ahead and place two trades right here. So go ahead and place those. Yeah. For longs. And we're going to look for another bounce. Oh, we missed it. If it drops back down again, go ahead.
Okay. So it doesn't have to hit the line, just right by it.
Yeah. Just get close to it.
Okay.
Yeah. That's the other thing is people think you have to be like perfect, but in trading, just get close enough.
Okay.
It's going to be a little slow for a minute here.
So it just shows you that missed opportunity. It's like, so
yeah.
You don't want to do that.
Don't worry about that because there's plenty of opportunities in the market. So this looks like it may make a little push lower here in just a second. So we may have another. I'm gonna do a couple of trades here for us, though. Yeah.
With the yellow, it's like you wanna sell.
So we're gonna go short for a second here because the market's going to have to, in order to make a turn, it's going to have to break up above that point. So as it comes into that point, go ahead and place some sells now.
5 of them?
Right now, as many as you can. Sell. Keep going. 2 more. There you go. Let's stop there. Now, the reason why we're putting this here is because it's going to be hard for the market to make that turn, and so it's likely going to bounce off of it, just like it's doing right here. And let's see if it keeps dropping. There you go, making more money. And we got 4 trades left. There you go. Now get ready for when it gets down to that red line again, the middle one. Get ready to place some buys. just go 2 at this time. Perfect.
Oops, I did 2 more.
It's okay. Hey, you made money on them, so that's what you want. Very good, Kathy. You're doing great. It's not that bad. Not that bad, is it?
Yeah, and I mean, we're talking conservative. I can't wait to get my profile done, but I'm starting to get the feeling of Steve Romano being aggressive.
We're not regressive yet.
No. But for me. Okay, so am I going to be doing short?
So what's happening right now is, I'm going to run the mouse here.
Okay.
Just kind of going sideways. So you can see these aren't really getting any, they're not going up and they're not really going down. It's just kind of going sideways.
Mm-hmm.
So what's going to happen now is the market's going to break this little sideways consolidation. Now, we don't know which direction it's going to break. We can guess, but we don't know, right? And so our job is to kind of wait now and see which direction it breaks, and then we'll place some trades again. So right now is a waiting game, but go ahead and place 2 longs when it comes down to that red line. Just 1, 2, just 2 is all. Right here.
I did, right?
Yep, perfect. Mm-hmm.
Okay.
Yeah, we'll just keep doing that as it hits one of the red lines.
Okay.
One of these times we're going to be wrong, right? As it breaks, and hold on. I'm not going to go short on this one, so let's hold off on doing anything on this one.
Okay.
So don't do anything this time. Don't do anything when it gets up to the red line. I'll tell you the reason why.
Thank you.
We've come down right here and established this line as a support, and we rallied up once, rallied back down twice, rallied up, rallied back down. So we bounced off this point 1, 2, 3 times.
Mm-hmm.
So now this is a really good place for it. If it's going to break higher, this is a really good place for it to break higher. So let's watch and see if it does that. So normally in the last 2 times we just sold here, but we're not going to this time because it's a good chance that it could break and we'll be losing in that trade. So let's watch and see what it does. Colin asked a question in the chat box. If it moves against you, what levels do you consider getting out? So I do things a little bit different, Colin. What I'll do is I'll manage a position through an entire 5-minute range. So if you look at the range on the 5-minute, it's from here down at the bottom to here at the top. So I'll manage those positions through the entire range. And so, but if it comes up, if I get into these trades and it breaks the previous range, then I'll look at getting out. The stop is like way out of range, but we've got really wide stops. We just want to give the market some flexibility. Okay, so Kathy, did you see that? See, it tried to make that break there. It tried to make the break, but it didn't. It got pushed back down. So now, if this market makes a turn and forms a lower candle right here, so it crosses down below that little tiny red line, then the chances are it's going to come back all the way down to here. And it could easily break that and come down to here. Now, this is not when we want to be trading because it's like building all this up and down is building up momentum, is building up like energy. And so I don't like to trade in the early stages of the energy, because we typically get it wrong in early stage energy. And so I just kind of hold off and wait for a minute until I can get the market overextended one direction or another. But nothing's, so watch how these candles, they're going to start to break one direction or another, most likely going to be to the downside now. So we'll let that break to the downside. So our next trade, we want to place 2 longs. So 2 longs when it gets down to that circle. So here it's going to try and break. Get ready to place those longs when it breaks down and gets into that circle.
So at the top of the circle, Sean, or on the line?
Just somewhere in the circle.
Okay.
Ooh, it bounced a 4th time off of that. Go ahead and click the sell button.
Just how many times?
Just twice. We'll start with 2. Explain that I can't always answer the questions as I'm trading like this, just because I've got to maintain my focus on what's happening. All right, now here's the moment where it's where it's likely to break. Let's see if it makes its break again.
How many times, Sean? 2?
On the buy side?
Correct.
2 for now. But wait till I'll give you the word on that, because this one's likely to drop through the circle. It's just a lot of momentum, right? Or a lot of what I call potential energy. It can get going pretty quick, pretty fast. So wait. A lot of patience. And when we're trading like this, it's a lot of patience. We just kind of have to wait, pause, wait until that right moment. We do a lot of scalp trades, Rick. Yeah, we definitely do a lot of scalp trades like this, because typically we can. Well, you've seen what Kathy's been able to do this morning. She just, it just all adds up. A lot of little trades, and by the end of it, we're already at 0.23% on this little session. A lot of high probability quick scalp trades. Go ahead and click a couple buys right here.
2. Like, did it show up 2?
Yeah, you're good.
Okay, thank you. So why do we buy just then and not the circle?
Yeah, so I'm watching it. See how it kind of dropped through the red line, but it didn't follow through.
Right.
Anytime I see something that should follow through, but it doesn't, it kind of tells me that, hey, maybe it's not as strong as I thought it was. And so I'm looking for a little bounce here. May or may not happen, but I'm looking for a little bounce like it's trying to do right here. Because it tried to break down through that red line, but it's not really picking up any momentum. It's really slow now. It's not just moving sideways, right? Not picking up any momentum or anything like that. But look over on that 5-minute chart.
Uh-huh.
We're right in an area where we should start to see a bounce off that 5-minute chart. So we'll see if we get that. We should see a turn start to form on that 5-minute chart. There's a little bounce. See if it gives us enough. Okay, go ahead and buy 2 right here. 1, 2. And 2 more. And 2 more. Yeah. Keep buy a couple more and a couple more, couple more, couple more. Keep going until I say stop. Okay, so 1 more, and then we'll stop. Okay, so what we did here is we just built a little bit bigger position. And we're looking for it to bounce off this low here. So I'm going to add a couple more right in here. And we're going to move a couple of these targets down. So we want to hit a hard probability target. So we're going to pull these down just a little bit. And watch what happens right here. If we get a tail, hold on just 1 second. I'm moving trades around. Okay, so we got 52 seconds left on this candle. So each of these measures 1 minute worth of time. We have 52 seconds and it's starting to break. So now I gotta look and see where the next place where it could stop. Right there, or right there. So now we're gonna build a little bit bigger position again.
You want me to be clicking, or you're doing that for me?
I'm doing that for the moment, just because I need to, we're upside down right now.
Okay.
And so we're gonna, yeah, it's okay. This is all part of it. So what I'm trying to do is I'm trying to measure where this thing stops. So give me 1 second here. So this was the move before the big sideways consolidation. And so we're going to look for a movement after the consolidation of an equal distance. So that puts us right down here, right about that line right there.
Okay.
So that's why I wanted to get a bunch of trades on at that point. And then I'm going to clean up these charts just so that we can.
This is what your intense training will guide us to the understanding.
Yeah, so go ahead and place a bunch of trades here. So go ahead and buy. And buy. And buy. And buy. Keep going.
Still?
Nope, keep going. Just keep, we'll pause there for a minute. So all those buys are hitting. So now we're going to use that to close out of one of those. We're going to use the profit from these trades to start to close out of some of the lost trades. So these are the first lost trades that we'll have placed. So just, if it comes down to the red line again down here, go ahead and place buys again. So now we're going to do a technique that I call wobbling. So we're going to buy at one end and sell it at another end. And so we're just going to trade inside a little range. We're going to make a little bit of money, and we're going to use that money to pay off some of the losses that we have. So let's see if we get that. It's got to come back down in order for us to, let me see. So let's put some trades on, give that a second. If it drops, if that green bar drops down and turns blue, go ahead and place a couple of buys. So this is where we expect the market to kind of stall out on its down leg and then make a turn and move back up. But it's going to most likely bounce around here for a minute before it makes that move. So I don't know if you can see this right. I'm going to pull these up. Oh, took profit there. So the turn is going to, for all of these trades to make money, we're going to have to cross up above that red line right there. So this is what we call a reversal pattern. And so if we can get trades that have targets before that red line, see how that target comes up above the line? We want to set a set of wobbles down so they hit before that red line. Otherwise, we just have to wait for the red line the market to break up above that red line. So it's most likely going to drop back down. So when it comes down to this red line, go ahead and place a couple more trades, longs. Otherwise, we just wait for it to make its turn and move higher if it's going to move higher. The other thing I want to do is I want to pull these targets down just a little bit underneath. Ooh, right here. Yeah, I want to go ahead and click your buy button a couple of times.
Oh, I'm sorry, you got distracted there.
Go for it. Keep buying. Buy. A couple more.
Something just popped up. It said place modify order.
Yeah, go ahead and keep buying. These are all really good buys. There you go. Those won. All those buys that you just placed, they're winning. If it does that again, if it drops back down to that red line, add some more buys. I'm going to move some of those. I'm going to run the mouse for a second here. So I'm going to pull some of these back down just a little bit. Where you place where your targets are matters a lot, right? And you want high probability targets. One mistake a lot of new traders make is they go in looking at how much money they can make rather than placing their targets at high probability places and taking what the market's willing to give you. Those are two different things. It doesn't really matter how much money we want to make. What matters is how much the market is most likely going to give you. And so we want to make sure that all of those targets are in a place where it's high probability that the market can hit those levels.
Now that yellow is at the yellow line. So what, am I wanting to do any shorts or not?
Not yet, because the whole trade is based on, the whole premise is that we get a turn over here on that 5-minute chart. So right here, we should be getting close. We're going to start closing out a couple of those long trades. Tried to make that turn, but it didn't follow through. That means it should come down to that red line again one more time. Let's see if it gets that big run right here. That would be really nice. Big run right here would be very nice for us.
You're saying the big run would be shorts?
No, a big run to the green lines.
And then do we activate a short?
We're just looking to close out of all of our trades now.
Oh, okay, got it.
We're not looking for any kind of new trades. We just hope that it crosses all those green lines right here.
Okay, awesome. I see. Yeah, that's cool.
And just came really close, but didn't quite go far enough. You see how close it got, but it didn't quite hit there.
Yeah.
That happens. That's why I said it's really important that we find the high probability point. We were close, but we weren't quite on it.
So ready for me to?
Yep, go ahead. Click away. Keep going. Right here. Ooh, that's not a good. So pause for a second. Okay, so this is what we call a break of the support. So whenever this happens, I look up here and how much time you have left. We're gonna build a big position because we're kind of hoping to get a little bounce off of this break, and we need to book as much of that profit as we can on that break or on this bounce. So we'll watch and see. Didn't quite bounce far enough. So let's see if we can get a bigger bounce. Come on, market, move. It's kind of, I might have lost a little bit of internet. Yeah, we're lost internet. I lost internet. Can you hear me?
I can. Yep.
Yeah.
Everything I'm good here.
Okay. Give me one. Can you still hear out there?
Yep. Can you hear me?
I hear you now. Yep. So what's happening right now is we're forming a wick on that, trying to form a wick on that 5-minute chart. But in order for this to kind of rally up, these trades are now kind of outside. So these trades up here are kind of out of our range now. So we're going to have to go into what we call fix it mode now, and try and fix some of those trades that we're upside down on. So when you're in a trading session, there's a whole series. You'll have a whole series of trades that just work in your favor, and then you're going to have a series of trades that don't work. And one of the skills we have to develop is how to manage and work out of the trades that don't work in our favor. And so we're going to go through a little process right now of trying to figure and try and manage these trades. So this bar right here is a super important bar, and I'll explain. It's probably too much to explain in the very beginning, the first day, but this is what we call an apex bar, and it's also our turning bar. So what I want to do is I need to get a bunch of trades in that have targets before we hit the top of that bar. So you see all these trades out here are above the bar. And so what that means is that they're kind of out of range, meaning it's going to have to make a full-on turn in order to hit those targets. So I either need to pull them down, these trades down, so they're underneath that bar, or I need to push them out like I'm doing right here, so that we can recoup the money if we make the turn. We're trying to make the turn right here. What that means is basically we need it to cross above where it is right now.
Okay.
In order to form an up leg. Everything we've had is down leg, and so we're looking for the market to make a turn and form an up leg. In order for all these trades to hit their target. Don't worry if it doesn't make sense. We talk about this all the time in our trading sessions. Day one, it may not make sense, but come, day 30. So the other thing is I'm going to try and find a point down here where we can start trading inside this consolidation range. So I've been doing the same calculation several times, but during our session, but I haven't explained it to you really. So as that market comes down and hits that red line, we want to build a big position right in that V. Unless we break up. If we break up, then all the better.
So when we hit so am I supposed to be doing any shorts or no?
Let it do its thing.
Okay.
Now let's see if we get follow through. So notice it broke there. Now let's see some follow through. There's some follow through. And we're going to start to close out of some of those big nasty trades. Now, let's see, we're going to pull these down just a little bit, like right there. Because I really want to close out of these trades. Yeah. And we're going to just try and break even on the majority of those. So I'm closing. There we go. Now that whole trade is done. So what just happened there, Kathy, is we were wrong. And so clear back over here, when it came down and hit there, it never found support off that point, right? Instead, it
just kept plummeting.
So we're often going to be wrong like that in our trades. Does that make sense?
Mm-hmm.
And so what we did is we managed ourselves through this entire drawdown right in here, and then brought it all the way back up so that we were profitable in that trade. So that was the only reason we made a bunch of money, or the only reason we made any money during that process is how we managed the account through that point.
And that was being patient. And
yeah. Well, really, it's kind of knowing where. Like, I don't know if you remember, we drew that line. And looked forward and said, okay, the market will likely stall out towards the end of that line, which is where it started stalling out. Mm-hmm. And so we made a bunch of trades in there and made profit. And this big trade, we lost a bunch of money on. Mm-hmm. But then when it made that turn that we were, we talked about that candle, how important that candle was. Well, look how important that candle was, like where it moved from there, right? Yeah. Super important candle. We need to train. One of the things we'll do is we'll train our eyes to recognize where those important candles are, because you have to know where they are. You have to learn to recognize them, because it gives you an idea of where the markets are going to go from there. So this ended up being the most important candle on the day, because it formed the turn where we were going down and then went up. That was the candle that gave the market the trigger to go up, and it followed through and hit all of our targets just like that. So I know that's about as complicated, that's as complicated as it gets, but this is day one, right? Kathy, what matters is that if you look down here in the bottom corner where the account is at 51,413, you started this session off at about 51,167. So during this little session, Kathy, you've made roughly how much? $246 in this session. That was an hour, Kathy.
That's awesome.
An hour of trading and you made $246. Isn't that fantastic?
That's cool.
And that was that was trading like really slow, and we kept it real basic on that session. So that's fantastic. $246 an hour. Where do you go to make that? You have to be an attorney, I think.
Now, the time of the day make a difference too, Sean?
It does, yeah, for sure. The markets tend to move a little bit more in the morning like this. So anytime you can get the market moving, you can see. Where we struggled is when the market wasn't moving anywhere. It was just going side. Yeah. So anytime you can get good movement like we have this morning, that's when you want to get in. After this morning when I woke up, Kathy, before I started trading with you, I did a little trading session before I started trading with you. And in that session, I made $1,100 $1,167 in less than an hour. It was less than an hour. It's just boom, 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 boom. Made $1,167. So what I'd like to do, I don't know if you can see this, Kathy, but here's the check. What I'd like to do is I'd like to cut you a check for your profit, your $246 of profit.
Thank you.
I'd like to share that with you. But what I'd also like to do is give you my trading profit from this morning as well. So what that means is that you're going to get a check for $1,413.81.
Oh my gosh.
Is it Kathy with the C, right?
Yeah. Oh my goodness, Sean. Thank you, Alexandra. That's wow. What a way to get started. Thank you, God. Oh my gosh.
Not everyone starts that.
I know, but it's so inspiring, Sean. And this is part of why I was so just impressed with you, how humble you were in Vegas, how knowledgeable, how you're just a brilliant mind. This is amazing. And to know that I'm going to be walking through and have a coach to help me through the trainings.
Yeah, I mean, we don't leave you empty-handed around here. We don't just say, you got someone to walk you through every step of the process.
So everybody doesn't know, Sean has his kids being part of this whole experience, and I'm impressed that he's building his family to have that legacy of the knowledge he has. And Sean, it's so cool. I can, cannot wait.
Not very many people know this, and I don't share it very often, but this apiary fund is what we call a family office. And basically what the family office is basically it's an investment business that manages the family money. And so literally, when you come in and you're a part of the apiary fund, you're managing the Lucas family money. And so, yeah, I want my kids to be a part of it. I want them to make sure that they understand, what this is all about and how important it is that we do our job to make sure that we develop good traders, because this is the family money. All right. Kathy, I'm looking forward to great things from you, but check this out.
Oh my gosh, I'm just, oh man, blown away, Sean. I mean, the $250 roughly, that would have been just.
That would have been good. Hey, no one can complain about $250 a day, right?
Not exactly. Man, God bless you.
Thank you, Kathy. And it was a real pleasure trading with you this morning. You're going to do great as you keep that attitude of following the instructions and going through the B line. The B line's going to walk you through every process to learn how to trade. You'll question, why do we have to do this? What is this about? But we know how to get traders to the point where they're successfully making money successfully every day. I always say that it's great if I can show someone how to make one good trade. That's good, but it's a whole nother level to help a trader get to the point where they can consistently make money day in and day out. We've done these Trader on the Streets now. What is this? Probably our 78th, 79th time, and we've had some struggles. We've had to work through some long days through these sessions, but we always end up positive, which is what we're looking to do by the end of the day.
Oh, it's cool now with everybody in stay at home mode. we're able to do something that we don't have to go outside.
Exactly, right? It's the
Yeah.
perfect corner.
It is.
You're a nurse, aren't you?
I am, yeah.
Oh,
But
that's
I'm
very
not
hard.
practicing. I have a disease that has kept me out of working outside the home. So I've done a lot of different businesses, and this is going to be the most impactful. I mean, my friend Michael, who I know is on, we were talking, neither of us have retirement. It's just, the life happens, and to have something that we can have the skills and not depend on other people, but we can take control of ourselves and our families. It's like, man, I'm 61. I need something. And so, God is good all the time. Yeah. I'm excited.
I love it. You're gonna be a great trader, Kathy. Just keep. You're gonna have good days. You have bad days, but just keep that fire and keep that desire with you, and you'll get through it. So you're in great hands. So, all right. Well, everyone else out there, we'll wrap this up. Just want to let Kathy, everybody congratulate Kathy. She did a great job today. Her first trading session. I mean, that's always intimidating to come in on your very first trading session and try and get the very good. Thank you for. But you did great, Kathy. So we'll let everybody head out and do their thing for the day. And I really, truly look forward to trading with you here at Apiary Fund. Make sure you reach out to whoever invited you and to get started, to get signed up and start trading with us. So. Thank you. Good job, Kathy. We'll reach back.
Thanks, everyone.